What if I told you that while you're watching this video, someone just made their first property purchase that will set them up for life, while another person is still making excuses about why they can't start? The difference between these two people isn't money, connections, or luck. It's knowledge and action. I'm about to share the exact roadmap that beginners use to break into property investing, even with limited capital. By the end of this video, you'll know the 3 fundamental strategies that work, the biggest mistakes that drain your wallet, and the one mindset shift that separates successful investors from everyone else. Let's start with the harsh reality. Most people think property investing is only for the wealthy. That's completely wrong. You don't need hundreds of thousands in cash sitting in your bank account. What you need is understanding of how money actually works in real estate. Here's your first foundational principle. Property investing isn't about buying houses with your own money. It's about using other people's money to acquire assets that generate income and appreciate over time. Banks, private lenders, and even seller financing can become your partners in building wealth. Your second principle revolves around cash flow versus appreciation. Cash flow means the property puts money in your pocket every month after all expenses. Appreciation means the property increases in value over time. Beginners often chase appreciation and ignore cash flow, which leads to properties that look good on paper but drain your resources monthly. Now here's where most newcomers stumble. They jump in without proper financial preparation. Before you even look at your first property, you need 3 things locked down. First, understand your current financial position, including credit score, debt ratios, and available capital. Second, establish relationships with mortgage brokers who specialize in investment properties. Third, build your team including accountants who understand real estate taxation and lawyers familiar with property transactions. The biggest mistake I see beginners make is analysis paralysis. They research for months, attend seminars, read books, but never actually make an offer. While education matters, nothing replaces real experience. Your first deal doesn't need to be perfect. It needs to be profitable and help you learn the process. Here's a strategy that works for beginners with limited funds. Start with house hacking. Buy a duplex, triplex, or small apartment building. Live in one unit while renting out the others. The rental income helps cover your mortgage payments while you build equity and gain landlord experience. This approach often requires smaller down payments since you're buying a primary residence. Another beginner-friendly approach focuses on distressed properties in decent neighborhoods. These properties sell below market value because they need repairs or have motivated sellers. The key is accurately estimating renovation costs and understanding the after-repair value. This strategy can create instant equity when executed properly. Your mindset determines everything in property investing. Stop thinking like a consumer who buys things for personal enjoyment. Start thinking like an investor who purchases assets based on numbers and potential returns. Every property decision should be driven by cash flow projections, market analysis, and long-term wealth-building goals. The path forward is simple, but requires commitment. Start educating yourself about your local market conditions and rental rates. Get pre-approved for financing to understand your purchasing power. Begin networking with real estate agents who work with investors. Most importantly, set a deadline for making your first offer and stick to it. Property investing changed my life, and it can change yours too. The question isn't whether you can afford to start. The question is whether you can afford to wait another year while property values continue rising without you.